Asian markets have taken a battering today, especially in Japan, where the Nikkei suffered its biggest one-day decline since the aftermath of the 2011 tsunami and nuclear disaster.
News from both sides of the Pacific heavily impacted trade. SBS business reporter Ricardo Goncalves has the details.
Well, it began with comments from the US Federal Reserve Chairman Ben Bernanke overnight, who said that the American jobs market remains weak and that it's too soon for the Fed to end its stimulus program. But then came this.
As the economic outlook, and particularly the outlook for the labour market, improves in a real and sustainable way, the committee will gradually reduce the flow of purchases.
Now, that means the Fed will stop feeding the US economy. It's just a matter of when. It didn't faze Japanese investors at first. The Nikkei touched a fresh 5.5-year high early in the session, but after lunch it went into free fall, closing more than 7% weaker. Now, long-term Japanese government bond yields briefly spiked, but an even bigger trigger were renewed fears of a slowdown in the Chinese economy. A manufacturing survey came in worse than expected, with an index measuring the sector falling to around 49.6%. Anything below 50 suggests a contraction. But don't forget, Japan's Nikkei has run up hard, rising around 40% since the beginning of the year. So many investors use today as an excuse to dump stocks and lock in profits.